Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is Thursday the 23rd and we have the market moving lower here except for wheat, which bucked the trend here, ending 8 days of selling, closing up 4 1/4 cents on the day for the September contract to 5.21 even. We did see corn futures mostly unchanged, down 1/4 penny to 4.13 1/4 on the December contract, and soybean futures down 16 cents on the November contract to 9.79 1/2. Now, of course, this morning export sales came out, but we also had some additional news. These were reportable export sales greater than 100,000 metric tons. And we saw 180,000 metric tons sold new crop soybeans here to China. We also saw 40,000 metric tons of soybean oil sold to Venezuela for old crop. So this morning's reportable sales were very positive, and this comes really the third day of reportable export sales. We saw one on Tuesday for 110,000 metric tons to unknown destinations, one on Wednesday for 120,000 metric tons for soybeans to China, and then again another Chinese sale here this morning. So all that seems to be relatively positive for soybeans, but it really didn't help change the selling pressure that we saw this morning. Let's take a quick look at the charts here and see where we kind of closed off the day, see what the landscape looks like for the week to come. When you look at the chart for corn, you'll notice that we kind of moved right down to that blue line. That blue line is a Fibonacci retracement from the rally there from June to the highs on July 14th. 50% retracement was touched on today. We were able to rally back kind of to the open and for the most part finish out the day unchanged. But when you look at corn down the line, I think when the weather outlook is really going to cap any sort of major gains. So I would be surprised if we go up toward those highs that we set back on July 14th. But I do think that it is possibility that we get a little bit of a rebound here after really about a week of selling. When you look at soybeans, you'll notice that we did break through that little trend line that we were looking at, that area that we were kind of bouncing off of. Once we fell through that, we really kind of started seeing some additional sales that were pushing the market lower here. So I think when you look at export sales, I think in general, I don't think soybeans is really going to be able to continue selling sharply. I wouldn't be surprised if we do get maybe another follow-through day of selling. But like I've said here for the better part of the week, I wouldn't be surprised if we just kind of start chopping around this area. The weather outlook is positive, but a lot of damage has already been done. So now we're just trying to weigh, is the damage that's done offset by the improving crop prospects in the western part of the grain belt? That is yet to be seen, and that we're going to learn a little bit later on during the season. I don't think we'll get too much clarity on that really in the next month, except for the WASI report in August 12th. I do think we'll get a little bit more clarity on how many acres were actually planted there for soybeans, and I wouldn't be surprised if we get a yield revision, but the question is how much of a yield revision. If it stays unchanged, I think that would be very bearish here for both corn and for soybeans. Let's take a look at the export sales. This came out this morning. You'll notice corn came in below analyst expectations for old crop sales here, booking 223,000 metric tons compared to expectations of between 250 and 450,000 metric tons. Now, soybeans was unable to really make much for sales, but at least it didn't see cancellations. We did get 80,000 metric tons of soybeans sold. Analysts were expecting between 0 to 150,000 metric tons. So this was positive, but it just didn't provide enough bullish information here to lift soybeans, which really kind of unable to really hang in there today, hang in along that support line that we had been talking about. When you look at wheat was very positive, and I think one of the reasons why it finally was able to close positive on the day, we did see 502,000 metric tons sold. Analysts were expecting anywhere between 200 to 400,000, so this was an above average sale here for wheat. This was really above analyst expectations and a good piece of news here for wheat, which has really been struggling on the export market recently. When you look at export sales for the new crop, what's interesting is that corn came in within analyst expectations, but soybeans missed analyst expectations, only booking 241,000 metric tons compared to 300 to 550,000 metric tons. So let's just go through. Let's first talk about old crop, then we're going to talk about new crop in terms of meeting the overall expectations and forecasts that are set by the USDA currently. When you look at the cumulative export sales for corn here, you'll notice this histogram shows cumulative export sales. Each one of these red bars shows overall total cumulative sales for old crop corn, and you'll notice the green line is where we expect, the expected pace, taking into account the USDA forecast as well as the seasonality of sales. And then the blue line here is last year's sales. So you'll notice that cumulatively corn has sold 46.8 million metric tons compared to the last year at this time when we saw 48.4 million metric tons, and the expected USDA pace of 48 million metric tons. So you'll notice for corn, we are behind the pace needed to meet USDA expectations, and the sales that we saw this week really did very little to moving us toward that overall goal. When you look at soybeans here, you'll notice that we've booked 50.7 million metric tons. Analysts would expect, analysts are expecting somewhere between 50.2 million metric tons needed at this time to meet USDA expectations. So really over the last 4 weeks, we haven't seen much out of export sales for soybeans, unfortunately, and it looks as though in the next couple weeks we very easily could cross into being behind pace, something that we haven't seen really all year long for soybean export sales. When you look at new crop sales for soybeans, this is very interesting. The red line is showing cumulative export sales for new crop soybeans. When you look at the black line, the dashed line, that's the 4-year average for export sales during, those cumulative export sales going from January till this week in July. And you'll notice we are well behind what we typically see. We're about 58% of what we would normally see in terms of cumulative export sales booked. So we are behind pace for soybeans. It is good to see those reportable sales here throughout the week, but we're going to need to see more sales to get us back up to pace to meet USDA expectations. When you look at new crop corn export sales, very similar scenario. You'll notice the red is this year's cumulative export sales, and we are well behind pace again, really somewhere around 58% of the 4-year average. So we've got a little ways to go before we get finally caught up in terms of cumulative export sales. And this week we just weren't able to do that, barely meeting expectations. We're going to need to see better new crop export sales here if we're going to see prices continue to hang in there. But of course, when you look at new crop prices, those new crop prices are for the most part really weather driven at this point. But these sort of demand numbers are certainly not helping things out on the bullish cause. Guys, that wraps up today's show. If you have any questions about what we talked about today, please give the office a call. Number is 877-472-4607. Look forward to hearing from you. And of course, we'll see you on Friday for the weekly wrap-up.